Hello traders, welcome to another daily analysis. Today is January 23rd. We are right at Monday 5:25 p.m. Eastern Standard Time. So it's really unimaginable in 7 days we will finish January. That just shows you time really flies by. So, treasure every moment you have. So let's get into the market. Today is an unusual Monday with no tier 1 data. So things were pretty quiet. I have made a mistake actually previously. I messed up the time of the REITs events. We actually had the ECB Draghi spoke today at 6 a.m., which I thought was at 6 p.m. So really nothing much during the speech. I don't have any major catalyst from the speech. So it's pretty much just a reassurance for the ECB stance. Reiterated what they have said last week. Really, not the speech was not a big market reaction. So beside from that, there was no tier 1 data, but the equity market actually closed down today in both European and US market. And we have sort of a continuation of risk-off sentiment. Now, this, of course, is due to Donald Trump. So last Friday, as everyone knows, he took the office officially. And Monday, today, he already started acting on his protectionism. Now, as we mentioned that before, the only economic risk for US in 2017 will be his protectionism. Because aside from that, fundamentally, US is very strong and solid in terms of their fundamental data. The interest rate is looking to be hiked. The yield continue to go up. So everything is working well. The economy is definitely heating up. So the only thing will cooling down will be his protectionism, which of course will hurt his trade, will also hurt. Basically, if you study economy, you know that protectionism is really a lose-lose situation for the world. It's not even for the country. So and that will be the biggest risk, major risk, not only for US, but maybe for the global market in general. So we will see how that affect the market. But right now, the general sentiment is a risk of sentiment. And because of that, oil market also closed down today. Regardless of some positive news from the oil market, first is Iraq has already cut output, and also, as mentioned, Saturday we have the OPEC meeting. Now, most oil producers are working together in the oil output curve. So really, so far everyone is cooperated well in OPEC, which is very, as mentioned, very good sign because people don't have too much faith for the OPEC members because they have cheated before, and that's really the tendency to cheat when you create agreement to artificially control the market. Nevertheless, so far everyone is in cooperate well, so that's a good sign. We also have good news from China saying the crude oil import volume rise in 2016. Now that signals a continuation for the demand from the second largest economy for the world. So of course that's another good news for the oil market in general. However, we do have the U.S. shale oil producer continue to raise their output. Now this is expected, as mentioned, that the U.S. oil shale producer is basically in a rivalry stance with OPEC members. So they are not going to cooperate with OPEC. On the contrary, they are going to take advantage when oil price goes up. But OPEC member has factored that effect in already. So this is still not going to stop the oil price to climb up. As mentioned, fundamentally, oil price should be and most likely will be at least above $60 per barrel. But we just don't know how fast and how soon the path to there is, and we don't know how volatile that direction will be. So be careful if you're trading oil. But right now, it's looking really depend on the risk sentiment for the world. As long as US dollar is pressure, that should support the oil market for some reason. But unfortunately, that does not transfer to the strength for Canadian dollar because Canadian dollar right now is really facing this big risk with the US. The trading North American free trade deal is really up in the air, and that severely affect the economy of Canada because 70% of their output is to US. So exactly at the same position as Mexico. Although they are much stronger economy, but you really expect to see a large uncertainty over Canadian dollar. So this is a bigger effect, or bigger than oil market right now. So US dollar, of course, continue to suffer from uncertainty. We are at 7-week low, and British pound has regained strength again. Now, mainly because tomorrow the big risk event is the High Court ruling. So what happened is now that people are pricing in for British pound. The general expectation is that High Court will rule in favor for the Parliament again, and that, of course, is another positive news for Brexit. So you're gonna see a lot of trader pricing already. And let's see what else. So yes, remember the buy rumor and sell fact effect. So I wouldn't suggest you to buy in right now because it's kind of too late. Like, I personally would not trade anything. I would not price in if I don't have more than 48 hours. So I would not price in. However, I will trade the catalyst, and there's few ways I'm gonna trade it. First is that I'm looking for a surprise. So if the High Court is ruling in favor for the Parliament, I will not trade because there's no surprise. We all know that's the expectation. However, if the High Court is ruling for the government, then that will be a very negative surprise. You can expect British pound to drop significantly. Which pair you want to pair up? Actually, any pair is fine in terms of that result. Definitely, you can choose something stronger like Australian dollar or New Zealand dollar. But nevertheless, if the High Court is ruling in favor for the government, you will see a huge drop in British pound. However, that's really unlikely to happen. So if the High Court is ruling in favor for the Parliament, you will see some initial spike in British pound, but most likely it will die down because you will have a lot of buy rumor, sell fact trader to take profit. You will also have a lot of inexperienced traders jumping only to buy at the high. So you definitely don't want to be one of those traders. So what I do usually is I wait for the initial spike, and we don't know how long that's going to be. Maybe it's hours, and we also don't know how large that movement is going to be. That's just one of my strategy. Of course, the initial spike might be long and huge, then that's just the profit you are going to miss. I like to trade that way just because it's safer, right? If I buy at the result when there's no surprise, I have a huge risk buying at the top. So I don't like to do that. I wait after the emotion die down. So basically, I sell after the emotion die down. I will try to sell British pound for this reverse effect, or I will buy after hours of the catalyst because most likely it will retrace. Then I will get in at a proper level. So that's just my game plan for trading these risk events. So basically right now, my general view. So you have to understand this is different than our weekly outlook because weekly is more a fundamental bias. Right now, it's really for people who are trading daily or intraday trade. So the general view, my personal view, is that right now US dollar will continue to be the weakest currency for this week. Now, the reason is because regardless of all the fundamental data, right now Donald Trump is taking the office and the sentiment is generally very negative from his protectionism. So the question you gotta ask yourself is that whether his protectionism will continue. And I think most likely it will, at least for the initial few weeks. The reason is he has to fulfill the promise for his voters. A lot of people vote for him because of those protectionism. They were happy and certain that he's going to build a wall. They were happy that he's going to be tough on China. He is going to dominate the global market, military strength. So those are the promise he has to fulfill for his voter. Now, I'm not saying he will do that because he has a long time to run the office for the next 4 years, but at least initially he has to show some direction in those areas. Then that's why, if you think about it logically, he will try to at least fulfill those promises which further enhance the protectionism, which of course continue this negative sentiment for the market. So I do think US dollar will continue to be the weakest currency for this week. I also think Canadian dollar will come as second, and reason again because the US uncertainty especially the trade deal with Mexico and Canada will be very uncertain for Canadian dollar, and that will play a huge effect. For time to time, you will have the oil market rally, which will support Canadian dollar. But for now, sentiment is really strong. Very negatively, it's strong, but in a negative way for Canadian dollar. So these two really will be the weakest currency, US dollar and Canadian dollar. I think the strongest currency will be British pound and euro. British pound, of course, aside from last week's Prime Minister May's speech, the clarity for the brief exit, I do think tomorrow the High Court ruling will play another new sentiment into British pound, providing if everything is as expected, the High Court is ruling in favor for the Parliament. That's the first thing. Second thing is that we do have the economics poll for Bank of England's next rate meeting. And generally, people think that until 2019, they will not do anything about the interest rate. Now, this, of course, feeds into the fundamental picture, because right now the inflation has picked up for UK. However, this inflation has picked up not due to the economic expansion, but due to the devaluation of currency. So really, the Bank of England, their hands are tied. They really cannot do anything about that. If they raise the interest rate, they will cause the economics to shrink continuously. But if they cut interest rate, on the other hand, they will cause British pound to drop even further to cause the inflation even higher. So, right, this position that really probably will, like economics predict, to hold interest rate and really just do nothing, just wait. So because of that, and without any more risk events to come, you have to understand the market really, the number one thing that the market hates is uncertainty. So that's what you see last week. You saw that Prime Minister May reveal her plan, which is still a heartbreak exit. A lot of people think, oh, British pound rally because she said that the decision has to go through the Parliament. That's actually not the reason. The British pound rally for the very simple reason that the uncertainty has removed somehow. So the uncertainty has been removed. It's still there. We still don't know what's going to happen for UK. But whenever you have large uncertainty that's slowly being removed, you will always see some confidence regain, because people just don't like to be unknown. Right? They don't like to be in a position that's really unknown, because when unknown, you create a lot of fear for the future. For trader, investor, they really, or for human being as large, really don't like this kind of uncertainty. So as long as you have something, a removal for uncertainty will always equal a new strength sentimentally. So that's why British pound is, I think, will be the strongest currency for now, for this week, providing if tomorrow the High Court ruling is in favor for pound. Euro, of course, comes the second strongest now, because last week ECB basically again removed every uncertainty. Like, hey, we are not going to raise interest rate. We are not going to reduce the easing market. It is what it is. So people might protest, especially Germany, really don't like the effect. But the uncertainty has been removed, and that make euro dollar become more stable. So British pound and euro will be very strong sentimentally for this week. Japanese yen and Swiss franc also will be strong because the risk of sentiment. However, I wouldn't really say that they are as stronger as British pound and euro. The reason is because they both are really in a negative interest rate territory. Second thing is that they are safe haven currency, so you do need a sort of catalyst for people to buy into Japanese yen and Swiss franc. So if, of course, by this week you see some sort of new fresh data, like tomorrow if the High Court ruling is in favor for the government, then you can definitely sell pound yen. That will drop significantly. But unless you have those kind of catalysts, otherwise they will really just react to the market. Now, finally, Australian dollar and New Zealand dollar will continue to dominate the market for now. But tomorrow we do have the CPI data coming out from Australia. So that's why I wouldn't suggest you to get into that trade right now. At least wait for tomorrow's Asian session to see the updates for that. So first thing first, tomorrow have a lot of flagship manufacturer PMI and service PMI from France, Germany, and Eurozone. It's not a tradable event, but take a look at the number. If they are all largely positive, they will continue to support euro. High court ruling is coming out at 4:30 a.m. Eastern Standard Time. Expect to be in favor for. I'm sorry, I have a typo here. Expect to be in favor for the Parliament. Now, because it's again less than 40 hours, we're not trading into that. We'll trade on the surprise negatively, or we'll trade after the catalyst. So again, I will trade if the ruling is actually in favor for the government, which will be an upset, and I will sell British pound in any pair is fine. If the ruling is in favor for the Parliament, then it's really no surprise, so I will not trade. I will actually wait for the initial reaction to die down. Then I can either sell British pound when it goes too far away, when the emotions are too high. After it die down, you can sell it. Or I can look for it to retrace and buy back. So that's my plan. That's it. Especially that's it until Asian session. I trade Australian. You have two data coming out. One is CPI, quarter to quarter, year to year. You also have trimming CPI. Now, this trimming CPI is more important because I didn't say, I don't really care, but the Reserve Bank of Australia already mentioned that this is their measure for the inflation. So they will actually pay more attention to trimming CPI. So this is a more important data. However, how you're going to trade it? First rule is that you want everything to be in line. So you definitely don't want a mixed result because that's reduce your probability significantly. So first thing first is you want everything to be incongruent. You want they are all both positive or all negative. Now once you have that, then you want at least one of them to be a surprise. Then of course you will trade in that surprises. If it's a positive surprise, you buy Australian dollar. If it's a negative surprise, you can sell Australian dollar. Now, which pair to choose? If it's a positive surprise, you can buy Aussie dollar, providing, as I mentioned, the US dollar will be the weakest currency for this week. If it's a negative surprise, you could sell pound Aussie, but that will have to see what happens for British pound during the London session. So I cannot tell you that right now. We will have to see what happens. So basically, that's the bigger picture for the market, I think, for now, sentimentally. Of course, pay attention to any new catalyst, new fresh information, especially have a new president, which is very unpredictable. So anything can happen and will happen. Let's always remember, anything can happen and will happen. That is the nature of trading. Okay, so let's take a look at our 28 currency pairs. So first thing first, my New Zealand Swiss franc trade got stopped out. Unfortunately, I got stopped out today at this week here. So, as mentioned, this trade is probably going to keep going higher. Now, I got stopped out. I could have put my stop loss as 0.7148, just below 50. The reason I tied up so much is because right now we are in this risk of sentiment market. So I do expect Swiss franc and Japanese yen to be quite well supported, and that's why I don't want any upset movement. That's why I tighten up a little bit, very, very close, and that's why I got stopped out at break even. And it is the way it is, so it's nothing to really regret about. That's just the nature of trading. You also have to see that the average range has dropped significantly. Just show you that it's really in a sideways market. You don't really have much movement right now. Euro New Zealand, on the other hand, we are still in this trade. Regardless of the green candle last week, we actually dropped today. So it does look to maybe, again, goes to the sideways movement. So I'm still holding it because I'm still think New Zealand dollar has a stronger fundamental than the euro. And I don't really think which each one, either New Zealand or euro, which one are more strong for this week, but because the fundamental, I do still like to hold it, not in hurry to get out. If I get stop out at break even, that's fine. On the other hand, if I don't get stop out at break even, then I just keep holding it anyhow. So that's for the two of my trades right now. Especially in my weekly outlook, I got out of dollar yen on last Friday at break even. My dollar CAD intraday trade also exit last Friday. So let's take a look at 28 currency pair. Euro pound, again, another sideways movement from Monday. This will be a tradable data tomorrow, especially upon the High Court ruling. Basically, really, if these flagship manufacturing service data from Eurozone and France and Germany are largely positive, then you can pick this pair to trade upon a negative surprise from High Court ruling in UK. If you don't have a surprise, then don't trade it. Okay, that's just my stance. Euro Swiss, again, very sideways movement. Nothing to mention about. Euro dollar, as mentioned, continue to edge higher. Now, technically, yes, you are at resistance area, but looking at the sentiment, I'm really not looking forward to sell it, especially for now. Really need a fresh new catalyst to support US dollar or to weaken Euro dollar before I sell it. Otherwise, I'm looking to buy Euro dollar for the daily chart for this week. Euro Aussie, also looking to, I'm also not looking to sell, to be honest. Although it is good, but they both are strong for now, so not something I'm looking to sell. Euro CAD, on the other hand, I'm looking to buy again, and Euro New Zealand also not looking to do anything about it. Euro Yen, on the other hand, not looking to do anything about it. Pound Swiss, cable, generally speaking, we are edged higher to this 25. It's a very significant area because last time you touch it was, in December 15. So really, right after the interest rate decision from Federal Reserve, I think, and that's why you have this continuation drop. So because of the sentiment, although this is a nice level, you will see some buyers into US dollar, but right now it can really very easily to go as high as 27. Really, I wouldn't be surprised if it goes up to 27. So don't jump into it just because you are at the zone, right? Be careful for this strong sentiment right now. Pound Aussie, also I'm not looking to sell British pound. Really, it's depending on what happened tomorrow. If tomorrow is an upset, then yes, you can sell it. Otherwise, not looking to do anything about British pound for now. Swiss franc, Japanese yen, nothing to talk about in this pair actually. Dollar Swiss continue to drop. As I mentioned, yes, technically we are at a support area, but we do need a fresh catalyst to support US dollar. Canadian dollar US dollar dropped significantly. So glad we actually got out. Otherwise, we will really not making any money in this trade. So we are happy we profit last week for this trade. So what's gonna happen to dollar CAD? Most likely, without any significant catalyst, it might just go into sideways movement on this 200-day moving average. Dollar yen continued to drop again, and that's why I said really happy to exit intact last week because really got that continuation of dropping. So yes, this is a critical area, but again, it can very easy break down this support. It's nothing is holding this sentimentally. So don't be surprised if it dropped to 110. We do need a fresh data to support US dollar. So if it dropped to 110, it's definitely very good, actually very attractive to buy back. But as for now, I'm staying out of this pair. Actually looking to sell it if we have a signal here. Now Aussie Swiss, again, I'm not looking to do anything. Aussie dollar actually looking to buy back. So yes, it is continuation of going higher, but as long as the sentiment is still supported. But tomorrow we do have a trimming data, CPI data, so wait for that before you consider buying Australian dollar. Aussie CAD, same thing. It's a good pair to buy, but you have to wait after this catalyst tomorrow. Aussie New Zealand, I actually have this huge bearish candlestick. So this is actually not bad to sell, in general speaking. The reason is because right now Australian dollar is way more uncertainty than New Zealand dollar. They both are in the same category, but New Zealand dollar is really well supported, both sentimentally and fundamentally. Australian dollar, on the other hand, because of the CPI data for tomorrow, because of the general risk of sentiment that might affect the commodity price, which means that Australian dollar will have a much higher swing. So it does look good to sell. On the other hand, if you look at technically, you are right below this 200-day moving average. You do have this kind of double top movement, so it does look nice. Tomorrow CPI data will be something that makes me don't want to get into it right now. That's really the only thing. Again, if it's not the CPI, if it's just retail, I will get in. But CPI and trimming is important, so I don't want any upset. The risk is too high. Let's take a look at the expectation. Expectation is actually also in a positive expect. We actually expect higher than previous. So because of that, I think it's not worth for me to risk on that. I will looking forward to sell it maybe after tomorrow's catalyst. Aussie USD will be a good pair to choose because you remove the sentiment risk. That means that if the risk sentiment is up or down, they both will be affected, means they both will be hedged out. So this will be a good pair to short it if tomorrow the CPI data from Australia is a negative surprise. But because of the catalyst tomorrow, I don't want to get into right now. Aussie yen, on the other hand, same thing, is not looking to do anything for now. CAD Swiss is looking to short it, same as CAD Yen, you can look into short it. New Zealand Swiss, again, not looking to do anything. New Zealand dollar looking to buy, look at that, continue to go up. So very, very strong movement for New Zealand dollar. We do need sort of signal to get into it. New Zealand CAD and New Zealand Yen. This is all very good pair to, not New Zealand Yen, just New Zealand dollar and New Zealand CAD are all very good to buy. We don't have a signal in daily chart, but if you are more an intraday trader, you have your own strategies. Technically, you can definitely buy New Zealand dollar right now. It's more certainty here. So that's it for me personally. So the only thing I'm holding right now, again to recap, is the Euro New Zealand. I don't expect any large movement. Really expect to go to sideways movement. But tomorrow we do have data from Euro, so we'll see what happens. The biggest event will be the High Court ruling tomorrow. I am looking to sell at negative surprise. I'm not looking to buy because it's already priced in. I'm probably looking to actually sell Pound New Zealand. Pound New Zealand will be a good one to sell if it's a negative surprise. If it's coming out as expected, I'm also looking to sell if it goes too high up. So if the result is as expected, but I see like 150 and 250 pips rally, for me that's really irregular. It's just emotional play. I will looking to sell at a high. So I will try to make money in both ways. I'll sell when it goes too high, and I will buy back when it retreats. So that's my game plan. And Australian dollar looking to buy at a positive CPI data if we have a positive surprise. If we don't, if we have a negative surprise, I'm actually looking to buy Pound Aussie. But we have to see what happened to the High Court ruling. So that's it, guys. That's my game plan for tomorrow, and we'll see what happened. Otherwise, let me know if you have any question. I will be back tomorrow with another daily analysis. Thanks for watching. See you then. Bye bye.